showing that we lost 4.8 index points and we're currently sitting at 55.6. But Andre, of course, anything above 50 shows that we are expanding, so we shouldn't get too worried about the fact that we have dropped from 60.4 in February.
No, you're absolutely right. We're not really worried. I think it's just a bit of a normalization of the numbers. If you look at that 60.4, I think that was a bit too optimistic for February.
Well, let's just look at what pushed us to 60.4 and what's actually changed in the month of March.
I think the one thing that pushed us up was new sales orders in the previous month, and it just again normalized to sort of more sustainable levels at 54.8 this month, and that was the biggest contributor to the fall in the headline number to 55.6.
Of course, new sales orders. Are you concerned that from these levels onwards we won't be able to recoup some of those gains that we saw in the month of February? I spoke to George Glinos from ETM earlier, and he said it's actually a big point of concern for him.
Well, if I can maybe just take one step back, if we can look at something called a leading indicator within the PMI, and that is new sales orders less inventories, there was quite a big drop there. So if inventories or if new sales orders are bigger than inventories, it's a positive number. That actually bodes very well for manufacturing going forward. But if the reverse is true, that's a bit worrisome. So this is the first time that leading indicator actually points to something more ominous looking forward, but it's only one point. So we wouldn't look at just that one number. We would actually watch that leading indicator within the PMI for a trend to follow. But so we're not too worried at this point.
Looking at the prices that have also changed quite significantly in South Africa over the last few months, of course, we've just closed off the first quarter of 2010. Many are concerned about what's going to push us higher from these levels. What's your sense? What sense are you getting from the manufacturing sector?
Well, if you look at the prices paid index, it actually points to higher prices or higher PPI going forward. So that is a bit of a concern.
The employment side of things as well also looking slightly better, so that at least is encouraging.
Yeah, I think that's the most welcome development within this release, that, you know, for the third consecutive month the employment number is above the 50 mark, which actually is quite, you know, it indicates that there's job creation within the manufacturing sector, so that's positive.
And in terms of the total contribution to GDP, I suppose at this stage of the game we know that we're out of a recession and the manufacturing sector is going to contribute positively to the GDP number.
No, definitely. You know, if you look at the manufacturing sector, the second largest contributor to GDP, and if you look at this good numbers that we've seen for the first quarter, definitely will have a positive impact on GDP.
Looking at the producer price index as well, are you getting negative signals from there? Because some say that we're going to be seeing prices under pressure, others say that we should be seeing inflationary pressures coming through at some point.
Well, again, looking at the prices paid index points to a sort of sustained higher PPI, but then again, I think the biggest question is how will that filter through into CPI? And because the baskets are so diverse, it's very difficult to actually see a direct correlation. But, you know, if we see continued price pressure at the factory gate, obviously it will have to come through into CPI at one stage or the other.
And just looking at the Reserve Bank's target for CPI this year, we know that they're saying that we're going to see a low point of around 4.9% in the third quarter of this year and an average of around 5.4% next year. Do you think that's overly optimistic, given that the scenario has changed so rapidly in South Africa as well?
You know, funny enough, I don't think it's overly optimistic. I think it's achievable. You know, there's a fine or a shift in the way that they see things. If you look at the administered prices, all of a sudden everybody's talking about a tax rather than a sort of a tariff increase. And if you take that view on it, I don't think it will have such a major impact on inflation going forward.
Going back to the inventory levels, you know, it's interesting. In 2009 we went down to around 45.5. We're sitting now at 56.8. So a big recovery there, and you know, we've come down from 58.7 in February. So a little disappointing. But again, we know that the restocking process has taken you know, hold of the country quite significantly. Again, just taking note of the fact that we're still in the early stages of this recovery. Things could change quite dramatically, as you alluded to earlier.
Yes, definitely. But again, that just shows you how important that leading indicator is. If you just take the inventories, it actually says something. But if you combine that with the new sales orders, that will actually show you if new demand is going to outstrip current inventory, and that will actually tell you what's going to happen to manufacturing going forward.
And it's quite interesting as well that we've basically caught up to the rest of the world. I mean, we saw China coming out with PMI numbers, and depending on which one you look at, if you look at the official or the HSBC, both are above 50, but both basically stagnating at those levels as well. So not really much momentum to the upside. We know that Europe is also coming out with PMI numbers today. As a whole, the manufacturing sector globally, we are seeing signs of recovery, but again, it's about that momentum to the upside.
Yes, so definitely, but you know, everything above 50 is positive. So the manufacturing sector globally is growing. And just to put that 60.4 into perspective again, if you look at the global PMI, all the other PMIs, they're around the 53, 55, exactly. 56 number. So 60.4 for South Africa was too optimistic. So I'm actually quite comfortable with this 55.6.
Do you think we'll see a 60.4 anytime soon, Andre?
You know, I think maybe but no, I think we're probably going to sort of consolidate at this sort of 55 to 56 levels for the next few months.
Are you also worried about perhaps the strong rand and how that's going to impact manufacturing going forward?
You know, the rand, every time we hear the rand is actually stronger and stronger, but the manufacturing sector seems to have adjusted to the strong rand environment, because in spite of the strong rand environment, we've actually seen the recovery in the manufacturing sector, which is actually in itself quite a positive thing. So, you know, if the rand had to weaken to more acceptable levels, and I mean, that's also debatable to see where that is, you know, that will have a positive impact on this sector.
I think